Hello and welcome. In this presentation we are going to talk a little bit about the general process of taking delivery of a metals futures contract. We will be using the COMEX Gold contract in our discussion, so before we get to the delivery process, it is important to understand a couple key components of the contract. Each contract listed is a trading unit of 100 ounces of gold and is quoted in dollars and cents per ounce. Gold delivered against each contract must bear a serial number and identifying stamp of a refiner approved by the exchange. In addition, delivery must also be made from a depository listed by the exchange. Currently there are about 5 warehouses listed by the exchange, and they are all located in the New York area. The grade and quality specifications are also determined by the exchange and must meet the following requirements. Each contract must be 100 ounces plus or minus 5% of refined gold, assaying not less than 0.995 fineness, and be cast in either a single bar or 3 1-ounce kilogram bars. Now on to the process of taking delivery. The first step is to open and fund a futures account, since the process involves a transaction in the futures markets. Once the account has been opened, it will need to be funded with the appropriate amount of equity to take delivery. The amount needed is based on the full contract value as well as the delivery and commission fees. To determine full contract value, you simply take the price quoted per ounce and multiply it by the contract size, which in this case is 100 ounces. For example, if the current price is quoted at $1,500 per ounce, you would simply multiply that price by 100 ounces, getting a full contract value of $150,000. The current delivery fee is approximately $100 per contract, and the commission is based on your particular round turn rate. Once an account is open, funded, and activated for trading, an order to buy can be placed in the appropriate contract month and year. Once the order is filled, a confirmation is received containing the fill price. The fill price is essentially the price the buyer has locked in to pay per ounce of gold. The buyer then states his intention to take delivery of the contract to his or her broker and waits until notification of delivery is received. Delivery notification may be received any time after first notice day and no later than the last trading day of the maturing delivery month. First notice day of the COMEX Gold contract is generally the last business day of the month prior to the delivery month. The last trading day is generally the third to last business day of the maturing delivery month. For example, any open, long, or buy positions in a December contract could receive delivery notification on or after the last business day of the preceding November and no later than the third to last business day in the December of the delivery year. Once delivery notification is received, the details of the physical bars and warehouse location become available. The final contract value is then calculated based on the total number of ounces delivered and deducted from the account along with the delivery and commission fees. After the full contract value and fees are paid, the warehouse receipts are transferred to the client's account. At this point, the owner of the warehouse receipts has the option to keep the bars in the warehouse or make arrangements to take physical possession. If the bars are to be kept at the warehouse, the receipts are held in the brokerage account and assessed a monthly insurance and storage fee by the warehouse where the bars are located. These fees will vary by warehouse but are typically in the $12 to $15 a month range. If the owner of the warehouse receipt would like to take physical possession of the bars, then they would need to contact the warehouse where the bars are located and make arrangements directly with them. Generally, the warehouse will charge a withdrawal fee of approximately $25 per receipt. It is important to note that if the metal is removed from the warehouse, it is considered clear of the system and would need to be reassayed and verified according to the exchange specifications in order to be redelivered through the futures market. So this is the basic process of taking delivery of the metals futures contracts. If you have any questions or would like to talk a little bit more about how this process works, or just in the process of discussing, trading gold futures, please feel free to give me a call or shoot me an email at the numbers you see here.